Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis on Friday, September 19, 2014. And you're looking at a daily chart of the SPY. Let's move over so you can see a down day. What a shocker. And we came into the 20-period moving average. And basically, there was a lot of jockeying for position today. It was quadruple witching day. It was Alibaba IPO day. So the market started higher, and then it reversed down. And it's interesting because, normally the market kind of floats up into the end of the day Friday. But today, it dropped down a little bit. And some of that can be attributed to the fact that there was a lot of rebalancing going on between 3 and 4 o'clock, most likely. The volume picked up. Let's just take a look at an intraday chart and see the volume pick up. You see, last candle of the day, that's 10 minutes. Market dropped, heavy volume. That's a lot of rebalancing and jockeying for position around options expiration, but nevertheless, it is down. And the reason I think it's somewhat important so far, and as you know, I've been saying we're coming into a turn window or time period right now around the fall equinox, which is next week. So what happens is, let's go over to the IWM, which is the Russell 2000 index. And as we know, this is always a leading index, both up and downside. And today, look at that reversal it put in. It basically put in a huge reversal day, wiped out 3 days of upside, or at least 2 days of upside. This one was down first, but nevertheless, wiped out, let's call it 2.5 days of upside on heavy volume. And I don't believe that this can be attributed only to rebalancing, because the Russell was down, let me get the percentage here. Russell was down about 1.5% today, right? And the S&P was basically, it's down a couple of points, but it was a 1 point. So that was like flat. And the Dow was up, but the Russell was down over 1%, which is a big deal in my book. So we'll see what happens next week. It looks like we're getting into that turn window. There's evidence. The Russell is evidence, and I'll show you another piece of evidence. Back in the day, those of you who've been trading for a while remember we used to rely on Merrill Lynch to be the canary in the coal mine. Well, we lost Merrill Lynch in the financial crisis, so there's no more canary in the coal mine. But there's a couple that help. Okay, so J.P. Morgan is somewhat of a canary in the coal mine. So J.P. Morgan put in somewhat a reversal today on some volume. That's one. And another one is our friends over at Goldman Sachs, and that's not Goldman Sachs. That's Goldman Sachs, okay? Another reversal day. So, the financials are reversed a little bit. Let's see if we can, let's just check out Wells Fargo. I haven't looked at that one today, so let's see what that did. Not a reversal day, but no, that's really nothing. Could have been a topping tail, but it's not. Anyway, so a couple of pseudo canary in the coal mines put in a reversal day, and we'll see what happens. Next week is important. If we don't sell off next week, okay, and I don't mean a huge sell off, just something enough to say, okay, the short-term trend has changed. Then there's higher prices ahead. It's that simple, folks. I mean, it's just this market is strong. It's in an uptrend. Let's not forget. Let's go back to the SPY. Okay, this is a daily chart, right? Now go over to the weekly chart. Okay, what does that look like? That looks strong. That's in an uptrend. Now that's eventually going to come down, but right now, until further notice, the trend is up. So we need to be aware of that, and we need to respect the trend. And we will, and we do, and we are. But when we have periods of time where we think a turn is coming, we would like to notice it ahead of time and try and take advantage of it while it's happening. Okay, let's move on to the gold market. Gold had another down day, okay? Not unexpected. We're coming into a what would be a triple bottom if we get down this low. But gold is weak, and that was on the weekly basis. Gold is weak, and there's really not a lot to discuss in gold. My members got some thoughts on gold today, this afternoon during market hours, and hopefully they acted on it. I think it's a good trade, but nevertheless, I'm going to leave it at that and move on to oil. Okay, oil trend is down again, just like gold. Okay, but oil, the trend is down, and I think if we go over to a weekly chart, all right, this is USO. All right, if we go to a weekly chart, all right, here we came into this level here at broke 34, okay, and right here, okay, and we bounced up a little bit. Pardon me. I think the bounce should be coming to an end, and if not, it's got another day or so in it, maybe. And then I think we're going to come down and test this double bottom here. That's just my thought. I'm not doing anything with oil until I see those prices or see some kind of pattern develop that gives me more information where I can develop a price target. Right now, I don't really have. I have a price target on crude oil, which my price target on crude oil is around 85. Translated to USO, it's tough. It kind of translates to this double bottom here, but not exact. But as we get closer, as we get a pattern develop, I'll be able to do that a little more accurately. Interest rate market. This is a good one. This is TLT. Okay, this is the 20-year bond proxy ETF. All right, 20 to 30-year bonds. Big update today. That's a weekly chart. Let's look at the daily. Okay, big update today. And what does that tell us? Okay, there it is. What does this tell us? Well, let's go straight over to the 10-year interest rate. All right, 10-year interest rate came just up underneath this 200-period moving average and reversed. Okay, 30-year interest rate, daily chart, okay, reversed, okay. Interest rates going down is usually, not always, but usually a sign of the market going down, right? People are selling the market, going into bonds. That's the philosophy. Now, of course, there's going to come a time where interest rates are going to move substantially higher and they are going to choke the stock market, but we're not there today. Right now, if the stock market pulls back beginning next week, I believe you can expect lower interest rates into next week, and then we'll look for a reversal in interest rates and a reversal in the market when the time comes. But that's what I see developing. And usually the bond market is a lot smarter than the stock market. And that's to say that the bond participants usually can detect trouble ahead of time, and they're usually first movers over and above the stock market people. So what happens is the bond market moves first and the stock market follows a lot of the time. Not always, but a lot of the time. Well, that may be happening here. We'll see how it plays out next week. It's just another indicator. JP Morgan was a tell, maybe, an indicator. Goldman Sachs, an indicator. The bond market, an indicator. A couple of reversal days here and there, indicators. These are things where the market talks to us and it tells us what to do. Okay, we never impose our will on the market. We let the market and the chart setups tell us what to do. The market talks to us. These chart patterns talk to us, folks. If you know how to read them, okay, you speak the language and you can be ahead of the game a lot of the time, and you're going to be right a lot of the time. That's just the way it is. All right, now that we've got this week behind us, and what did we have this week, by the way? We had options expiration, quadruple witching options expiration. Okay, everything under the sun expired. Index options, regular way options, baskets of stocks reweighting, all kinds of stuff. Quarterly options. I mean, it just the list goes on and on and on. So everything was rebalanced, reweighted, rolled over, expired today. Okay, so that's why there was a lot of game playing this week. Number two, you had the Scottish vote. The Scottish referendum vote yesterday or last night came out. They're staying with Great Britain. That was potentially troublesome for the market if they broke away. There would have been a lot of uncertainty surrounding that. That's behind us. Okay, Alibaba IPO, Mac Daddy, good IPO. Really nice showing. Flawless coming out party. NYSE did a fantastic job. Okay. The stock popped $25. Almost got to 100. I think it got to 99.70. Came short of 100. Settled in at 94 and change. Up $25. Okay. really good showing. The investors made a lot of money. The founder, Jack Ma, and all the early investors and the second-tier investors in Alibaba made tons of money, and that's good for capitalism. It was a really positive IPO, the largest one ever. Okay, it was real important that they came out flawless, and it did. However, if you look at what's called the magazine indicator, okay, the cover of Time magazine shows something that's usually, the end, right? Well, everybody should buy a house, investment property, 2006, over. That was cover of Time magazine, stuff like that. This could be one of those things. Largest IPO in history comes out, and it could signal some kind of a top in the market. We'll see. We don't know. It's just, but the good news for all the Alibaba folks is it was flawless, and that's good to see that the markets work, folks, and that's important. You got to understand the markets work. Didn't work so well for Facebook. The Nasdaq kind of screwed it up. Maybe it had something to do with the investment bankers. Who knows? This one was flawless. Hats off to the NYSE. Nice job. What else did we have? We had something. Oh, we had the Fed meeting. How could I forget the Fed? So we had the Fed policy statement and phony press conference earlier in the week, Tuesday, Wednesday. All those things converged. Wild week. At the end of the day, nothing happened, and we'll see what happens next week. With that, folks, I'm going to wrap it for the weekend. Have a great weekend, everybody. I'm David Frost, mystrategicforecast.com. Thanks for tuning in, folks.